Good afternoon. Good afternoon. This is Professor Milligan, and welcome to another Wall Street Wednesday. Wall Street Wednesday. Let's see, today is September 8th, 2021. This is my 61st episode. Let me drop my disclaimer in here. Welcome, Soup. Let me drop my disclaimer in here, and my disclaimer basically is these are my ideas, my thoughts, my opinions. If you decide to do any trades on your following these recommendations or my opinions, please speak to your wealth advisor, your broker, whoever it is that you talk to. There is risk in everything I say and do, and there's a risk that you could lose your money. So again, if you like any of these ideas, feel free to just make sure you speak with your advisor. All right, cool. So waiting for the market to close. We know there's some big things coming at the end. We also, GameStop's reporting earnings, so we're waiting for that. Also, talk about the cryptocurrencies and the cryptocurrency sell-off. I guess it was 2 days ago when El Salvador decided that they were going to make Bitcoin one of their actual nation's currencies. And what's interesting about that is they made that announcement and Bitcoin and actually a lot of the cryptocurrencies sold off. I'm not understanding. I couldn't make the connection of why a sell-off. The only thing I can think of is maybe the market was expecting this or looking for this, and then once they got it, the whole thing about, as the saying is on Wall Street, buy on the rumor, sell on the news. So maybe that was it. Again, I don't know. Welcome there, Boo. What's going on there? Boo Milligan. All right. Looks like I don't have many people following me, so I'm not sure what's going on. Only 2 people showed up. All right. Now I only got 1 person. Wow, somebody left. All right. Well, anyway, let me dive into what I have. What's really interesting is anybody that listened to last week's call, if you actually follow up on any of those recommendations, you actually made money last week. So again, if you followed up on any of those recommendations last week, they actually made money. And so let me start again with what I always start with. Let's start with our futures accounts. This is a new one. It both give me both a technical and a fundamental recommendation, and that is soybeans. Short the beans. The beans look overbought. The beans have a huge short interest in terms of the commercials, and it's broken below its 10-day moving average. Short the beans. Last week we mentioned natural gas. If you went long natural gas, stay long natural gas. There was a slight pullback, but stay long. Natural gas is running. To add to natural gas, heating oil is running. Now, I'm not recommending heating oil, but I am recommending natural gas. Stay long natural gas. So soybeans, natural gas. We talked about OJ, orange juice. Stay short orange juice. Orange juice is actually going down. Stay short orange juice. Now, here's what's interesting. I also recommended staying short the dollar. The dollar actually went down, had a little bounce, and it closed just off support. So my recommendation here is if you actually got short the dollar, I'd stay short. Give it a little more leeway. See if it breaks this 10-day moving average. But again, if you got short the dollar, which we recommended last week, stay short the dollar. The euro, close out the position. The euro actually crossed above its 10-day moving average. You have to have some rules in your game. My rules are on this, if it crosses above, if I'm short and it crosses above its 10-day moving average, I close out. If I was long and it closed below its 10-day moving average, time to close my position. These are short-term trading ideas. The other one, let's see. Let's see what else I got for you. So I said close out your euro position. What else? Oh, close out your euro position. Close out your Aussie position. It had a nice run, the Australian dollar, the Aussie dollar. Nice run again from last week. It's right at its 10-day moving average. I'm just telling you to close out, take your profits. If you're already long, stay with it. Stay with it. Silver broke below its 10-day moving average. Close out the position. Again, nice move. Close out the position. Also last week we talked about staying short or shorting sugar. Stay short sugar. So I'm going to read them real brief again. I'm just going to give what they are. So again, new recommendation is short soybeans. That's a new recommendation. All right. Let's see what else. Stay long natural gas. If you were short OJ, stay short OJ. If you were short the dollar, stay short the dollar. Close out your position in the euro. Close out your position in the Australian dollar. Close out your position in silver. All three of them were profitable. Close out your position and stay short soybean. These are my commodity recommendations. It actually traded pretty well. So nice move, nice calls. All right. I always jump into the cryptocurrency now. As I started out on this call, I have no idea why cryptocurrency sold off. The only thing I can think of is, as I had said earlier, the saying on Wall Street, buy on the rumor, sell on the news. So I'm thinking that what was going on was maybe investors as a whole, the street was actually looking for some of these countries to actually make Bitcoin their official currency or one of their official currencies. So I'm guessing that they were expecting that to happen, and that was the rumor. And then once the news was announced, because it had run, they sold on the news. Very similar to what happened with Dogecoin, when Doge was Elon Musk was going to be on Saturday Night Live. So that whole rumor was he's going to talk about it, it's going to run. So as you guys know, Dogecoin ran ahead of Saturday Night Live. Then once he was on Saturday Night Live and he did not talk about it, it was sell off. So buy, as again the saying is buy on the rumor, sell on the news. I believe that's why the crypto sold off. Now, not all the crypto sold off. All right. So make sure you understand this. I'm going to say it now. I'm going to go to this one first. I've always talked about Doji. I don't understand why anybody would trade this. I don't understand why anybody would buy it. And Doji did not participate in the run in cryptos, and Doji did participate in the sell-off. So Doji right now sitting at support at 26 cents. You've got some resistance at the 34, 35 cent range. And if you know anything about Doji, Doji's is below half its actually high. So it's off more than 50% from its all-time high. Not good. Not good. So again, I'm not a fan of it. I recommend you guys stay away from it. I wouldn't touch it. What do I like? Well, Bitcoin. Again, Bitcoin sold off. Bitcoin had actually, ahead of all the news on El Salvador, had run up and was trading in the trading range between $50,000 and $60,000. We had talked about that last week. I had mentioned to you that if Bitcoin can push its way through 60,000, which I thought it would have a good chance, it would challenge that old high. When the news was announced and it sold off, Bitcoin broke its near-term support at 50,000, and now it's back in that trading range between 40,000 and 50,000. So that's the deal. Oh man, Alex. Yeah, man. If you had been talking to me, I'd have told you, man. Just I'm not a big fan of Doji. Anytime you got a profit in that thing, just take your profit. It's really, really just a risky trade. The reason why I say it's risky, even though we don't really know all the business applications for these cryptocurrencies, right now, Doji has no business application other than Mark Cuban saying it's going to be one of the cryptocurrencies he uses at his arenas and so forth. All right, so that's Bitcoin. Ethereum, like Ethereum. All right, Ethereum right now is right at support at $3,300. Let's see, I've got some resistance at support's at 3,300. We're right now trading at 3,500. So we're sitting right off on that support. I think we're doing really well. Like I said, it did sell off that news, but it bounced right back and it bounced off that support level. So again, if you want to be long the cryptos, I like Ethereum here. Now I don't buy things unless they go to the old high, but Ethereum is trading really well. And the one I'm pounding the table on Ethereum, and I'm also pounding the table on Cardano ADA. Cardano ADA set a new high, then it sold off on the Bitcoin news. So understand, it set a new high at 30 cents. It dropped down to support at $2.40. It bounced off that and it's sitting right there. Number of business applications, traded extremely well, challenged that old high at $3. I think it's going to challenge it again. I like that one. I already went over Doji. Ripple. And Ripple's sitting at support too. Ripple actually held up pretty well. It's sitting at support right now at $1.10. You've got resistance at $1.30. Ripple also, of all the, all the Bitcoin, all the cryptocurrencies sold off when Bitcoin announced that news. All right, they all sold off when Bitcoin sold off. But the deal is, they bounced back in the next day. It's been 2 days. They bounced back. Now, I'm not sure what's going on with Doji, like I told you, but the other ones have bounced back. So I like the 4 cryptocurrencies. I think they're trading well. I like the fact that they bounced off of support. Bouncing off of support just shows you that there is interest in these. While I'm on the subject of Bitcoin, one of the things I had mentioned was there's a close correlation between Bitcoin and Robinhood. All right. Not Robinhood, Coinbase. So just keep an eye on that. There's a close relationship to it. The reason why I'm talking about Robinhood is because Robinhood's on my stock list to talk about. All right. The other thing too is, as we know, on the close today, which I'm watching for now. Oh, GameStop reported earnings, I guess. So I'm not sure what it's doing, but earnings are due out in GameStop. The other one that earnings are due out is, and let me type this in here. So let me start typing some of these stock symbols in here. We've talked about this. Academy Sports talked about it. Stock sold off, like a lot of stocks sold off for the last 2 or 3 days. Earnings are due out today. Earnings are due out. From what I can see right now, the street estimate was for $1.42. We had talked about this because Dick's Sporting Goods had blown out the number. And I had mentioned to you guys, I said ASO actually was trading better than Dick's. And so I thought that would be a good opportunity here. So reports earnings today on the close, waiting for the number. Then again, $1.42. So I like this. Let's see what else. Now, I know we've had this sell-off over the last couple of days. I know we sold off some bit today. I know my screen was basically totally red. All my security, basically most of my securities are down. And with that, some of the stocks that we track, follow, and I've recommended to you still set new highs. Now it says GameStop did not beat earnings expectation. Alex posted, Alex, I'm almost 99% positive you were in my class when we were trashing GameStop. I'm pretty sure you were there. GameStop is not a business that's being priced or stock trade based upon valuation. So you can throw valuation out the window. They could have lost on earnings. They could have beat earnings. The fact of the matter is, this thing is being manipulated by the memes of the world, by Reddit. So I wouldn't even give this much weight. The only reason why I say it's interesting is because I know that people are watching it. Other than that, there's nothing there. It's not a legit business right now. All right. In fact, I would even go as far as to say GameStop trades more like a cryptocurrency than it does a stock. All right. So now I have mentioned these stocks. I'm typing them in. So give me a second to type these stocks in. We talked about them. They are trading well. There's no particular order here. I'm just typing them in as I remember them. I'm looking down. And I will discuss all of them as I type them in. So you can start looking. One that we talked about was Tractor Supply, TSCO, Tractor Supply. So you can start looking at that. I'm going to talk about Tractor Supply. What else have I have in here? I'm not going to put that one up yet. I'm going to talk about that one separately. Upstart. Let me see. Boom, 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 boom. All right. These 3 stocks we talked about last week. These 3 stocks set new highs. They're trading at or on their new highs. Now, I can't take credit for all this. And the reason why I can't take credit for all this is the reason why I talked about Tractor Supply is because somebody brought up Costco. And by the way, now I'll put it up. Costco's trading like a monster. It's a beast. It's a slow grind. Costco's not the kind of stock that's going to give you a 20% move in one day. But Costco is the kind of stock that you can look up and just say, wow, this thing just keeps grinding higher and higher and higher. So now, anyway, somebody brought up Costco. They brought up something else, and I said, look, if you're looking to play something in this. I can't remember what stock it was, but they were talking about the whole hurricane and people having to buy goods and services and suppliers, home builder suppliers, and I mentioned Tractor Supply, TSCO. Stock trading really well, set a new high. I like it. It's probably, I haven't looked at the size, but it trades more like a mid cap. And what I mean by that is they're not all over the country, but they're here. Growth is good. The other one I put up was Bill. Bill's just a monster. Bill's was an IPO basically, and I'm pulling it up now as I speak. Bill was an IPO that came public back in, when was that? Hold on a second. So Bill came public back in December 2019. And the stock's just a monster. Now, when we talked about it, one of the things I mentioned to you that, and I'll bring up again, that Bill had a classic cup and handle. I kept saying that. A classic cup and handle. And now I'm looking at it. Actually, it wasn't a cup, it was a saucer. So anyone that said she studied technical analysis knows that a saucer is like a cup, except for it's flatter and wider, but has the same effect. So I'm looking at, and please pull it up when you get a chance. I'm looking at Bill, has a nice little saucer. There's your handle. And then the breakout came off of earnings. And there it is. And when those earnings came, stock broke out off of volume. Low opened up at 250 and went as high as 285. And right now we're sitting right at our all-time high at 297. So again, this is Bill. Earnings were phenomenal. Keep an eye on it. Stay with it. The other one we talked about was Upstart. UPST. Upstart. Again, Upstart today set another new high. I don't know what to tell you. The stock is just trading well. These are what I talk about when I talk about, keep tracking these IPO stocks. Don't stop watching them after the first week. A lot of times people lose interest after the first week because they're not in the news and the stock had a nice move the first day and everyone's happy about it and took their profit and ran. Well, Upstart, as I told you, anywhere back in December, so December 2020, stock was, I said December 19, December 2020, I'm sorry. Stock opened up at 25 and here you are. So basically, a year later, stock's trading at basically $275. That's what you're looking for. All right, that's why you track these bad boys. All right, so setting new highs. Like these stocks, all of them. Other one that we talked about, I'm pulling up now. And these are IPOs that I'm telling you to track. And there's two of them. Bear with me a second, I'm going to type them in here. Actually, it's one. This stock IPO'd back in basically July of this year. It's Couchbase. IPO'd basically this year. Back in the actual date was, get the actual date, July 23rd. And right now the stock again has set a new high. And in this environment, in these last couple of days with the sell-off, stock's at a new high on some decent volume. So keep an eye on this. I take that back. It didn't set a new high. It went right close to it and touched it. So you know how I think. Keep an eye on this. I put it up here before. I expected, and I had told you if it goes through that $51, that $52, that old high. In fact, I'll tell you what the old high is. I get to move through that $52.26, the old high. I'd be a buyer of this near term. No question about it. So that's Couchbase. Couchbase. All right. Now, two other stocks I want to talk about. Then I'll open up and I'll take. I'm sorry, I was reading the screen. I'll take any questions or anything of that nature. So, the other one I want to talk about real quick is Bumble. So one of the things I want to talk about right now, I'm putting up the symbol, is Bumble, BMBL. And the other one I'm going to talk about right as soon as I get done with Bumble is Robinhood. All right. Bumble Bumble made a nice run. I don't like the stock at all. I don't like the company. I'm trying to figure out, one of the things with me with companies is I'm trying to figure out how they're going to generate revenue. I'm trying to figure out how their business model works and how it generates revenue. And the other thing I always look at is what differentiates them from their competition. And I don't know enough about the dating apps. I'm not into dating apps. But from what I've read and seen, I don't see anything different about Bumble. No interest in it whatsoever. Bumble's doing a 15 million share secondary, probably tonight for tomorrow, 15 million shares. Now, what's interesting is, follow me here. When the deal was announced that they were going to do a secondary for 15 million shares of Bumble, the stock was trading at $60 a share. Since then, between yesterday and today, the stock has dropped to $55 a share. The reason why I bring this up is two things. One, on a secondary of this size, they're going to price this thing in the hole. What I mean by pricing in the hole, the stock closed today at $55.84. My guess is, just looking at this chart, they're probably going to price this at $53. That'd be my guess. And now they could price it here because it's already come off $5, but I'm looking at 52, 53. So that's the first thing. I think the stock's going to come in because of that. Now, again, my caveat, I am not a fan of Bumble. But here's the deal. If the Bumble is priced at 52 and goes below 52, when it turns and goes back through 52, be a buyer because it's going to attack 60. If Bumble's priced at 55 where it closed and it opens up and goes down, I don't know if it's today, tomorrow, Thursday, Friday, next Monday, when Bumble goes through that secondary pricing number, whatever it is, when it goes through that to the upside, it's going to attack 60. All right? That's what I'm telling you. So it's a quick 5 to 10 points. I'll know more at its price tomorrow, but again, I'm going to say it again because this is what I think is going to happen. So you can actually, as the saying goes, take this to the bank. Bumble's going to be priced in the hole. It closed at $55.84. It's going to be priced further down than this, either 55 and maybe I think as low as 53. Wherever it's priced at because of the sheer size of this thing, I do not expect it to trade higher that day. I expect it to break the secondary offering price. All right, whatever it is. When it breaks that secondary offering price, it's going to trade lower. How much lower? I don't know. $1, $2, $3. I can make an argument that it could test 48. But here's the deal. When it finally digests and takes all that selling pressure out of it, the stock will turn and will attack the the secondary public offering price. So it means if it's 55, it's going to attack 55. If it's 53, it's going to attack that number. Once it goes through that number, your next stop is the pricing of 60, where it was priced before they announced the secondary. They just need time to digest this stock. It's a huge position and amount of stock. And as I look at it, which I'm doing right now, the average daily volume on this thing is 1.3 million shares. So that means if we just had natural buying in the marketplace, it would take approximately 2 weeks to buy this stock. So that's a lot of stock to be dropped on the head of the stock, dropped on the stock right now. Now, the other one I want to talk about is Robinhood. I had mentioned to you guys, I thought Robinhood would come back and fill the gap. Well, Robinhood came back and filled the gap. I mentioned to you guys that Robinhood was in a downward trend, and I felt like there's less resistance to the downside, more resistance to move back up to the upside. All right, so let me say it again. Less resistance moving to the downside. Now, here's the deal. Robinhood closed at $40. This is, we're not at the all-time low, but the all-time low right here is at $33. I think Robinhood's going to test that all-time low. I think Robinhood's going to test that 33. And if it breaks below that 33, I'll give you the exact number. If it breaks below that number, which is 33.35, it breaks below 33.35, it's coming down. It's going to come in even further. So make sure you understand this. This is all technical analysis. Robinhood right now is in a downward trend. It's been in a downward trend since August 4th, so beginning August. It's been in a downward trend. Lower highs and lower lows, downward trend. You're sitting right at near-term support, minor support. And this support's coming back basically when the stock went public. All right, those first 2 or 3 days. That's not really strong. The second thing is, if it breaks below the first day trading price, if it breaks below that, It's headed down. Play it to the short side. Now remember, guys, I tell you this a lot. There's a lot of IPO stocks that don't make the turn. You have more IPO stocks that a year from now will be out of business than ones that is basically setting new highs and going higher. So you can always make money playing these to the downside. I can just rip off a list of stocks that basically are almost down 90% from their highs. IPO stocks. Oscar, OSCR, comes to mind real quick. Casper Sleep, ADT. What else? Honest, Jessica Abbott's company. They're all just trading horribly. But that's what happens. Not all IPO stocks are great companies. Not all these companies are going to make the turn. I just pulled up Honest. Honest. Sorry. This is Jessica Abbott's company. There were problems with this company before it went public. The problem was the private equity guys, the investment bankers, were constantly lowering the valuation on it. So they lowered the valuation before they went public. The valuation actually was lowered 2 or 3 times over the last 2 or 3 years before the company went public. So, and the last time it was lowered, there was a bridge loan, and they lowered the valuation just before the stock came public. So with all that said, stock definitely was a sell. And you can see it right now. Stocks was priced at, I'm not sure where it's priced at, the high. I think it was priced at 24. I don't even think it actually penetrated 24. But wherever it was priced at, the high, all-time high is 24. That was set the first 2 days of trading. And the low is $9, and today it closed at $10. So, and it missed earnings. I mean, the stock got hammered off earnings. So this is what you're looking at. No offense to Jessica Abbott, I don't know the lady, but it has all the trappings of a company that came public, and that was a chance for the owners to bail out or cash out. All right, that's all the stocks I have on my list to talk about. If you guys have any stocks that you want me to take a look at, hit me up in the chat, in the chat box, the comment box. I'll wait a couple of minutes for those, and if no one shows up and no answers, I guess it'll just be a short day. It was somewhat of a quiet day in the marketplace. A couple things as I'm waiting to see if anybody types, and it's okay if you don't. Remember a couple things. One, buy high, sell higher. Forget that crap about dollar cost averaging. For traders. Now, if you're going to buy a stock and hold it for the next 20 years, feel free, dollar cost average. I told you I dollar cost average in my retirement account. But if you're trading stocks, don't buy the dips. Buy highs. When the stock goes to a new high, buy the new high. Don't sell highs. Now, the other thing, too, is, and this is a problem with newer investors. Hey, what's going on, Gabe? Newer investors think that when the stock's at the all-time high, that's where you should sell it at. The problem with that is that, you're selling your winners. The problem also with that is your stocks that are setting new highs typically continue to set new highs. So you're selling your best performer, you're selling your winner because of the fact that the price is going too high. And you fall into that trap about because the price is going up so much, it's risky. The only time it's going to be risky is if you're trading something like GameStop. All right? If you're buying legitimate companies in a solid market, which is what we're looking at, you don't have to worry about that. Moderna. Bear with me 1 second. I just need to go back. I need some time on it. I just want to look at some time. All right, I switched to a weekly chart. On the weekly chart, you can see it right there. Moderna is in a trading range right now between support at 375, 380, and your resistance near term is right where it is, the 430 mark, $430. I expected if it takes out that 430 mark to attack the old high, which is right there at 500, which basically was set a month ago. So stock's trading really well. Let me go to a day chart. Weekly charts, just a quick reminder, weekly charts take out the volatility. Yeah, and there it is. All right, so you got near-term support at 368, 370, right there. There was some minor resistance at 415. It went through it, and then today it pulled back and tested at 415. I basically looking at the chart, I expected to keep trading higher, and I would expect it to attack that old high. You've got some, like I said, you got some near-term resistance at 437, 438. Once you get that through that 438, this thing's taking out that 500. Yes, Caesar, I already talked about Ethereum. Give me a second, I'll go back. So yeah, I would say this is a nice trade. This is a nice stock to own. It's not moving fast. You don't see big gaps. I mean, you saw the big jumps up and down based on earnings, but other than that, it's slow and steady. Nice. You could trade it. Just be patient with it. It's not going to run. It's not going to double in price overnight, but it's going to give you a nice return. The other thing too about it is, which you guys all know, is that this whole COVID thing is just, it's just giving them a chance to just, as the saying goes, print money. They're printing money. All right, they're printing money. And I'm sure they're going to keep developing other vaccines for these different variances, but they're printing money right now. All right, Caesar, what I said about Ethereum was I like the stock. It's right now sitting at support at 3,300. At 3,500. You have near-term support at 3,300. All the cryptos sold off when the news came out about El Salvador. I guess, as I said earlier, as the saying is, buy on the rumor, sell on the news. But I like them all. They seem to have all held up. They've bounced back today. They're at major, all of them are sitting at major support levels. I expect them to continue to trade higher. I do not like Doji though. All right, let's see what else. I've been out of the market for like a month with a job interview and a new onboard. Anything to keep my eye on? Yeah, but I read through a lot, so I hate to say this. The best way to get all of them is to actually go through the the recording. I'll post a recording. The reason being is we talked about several stocks that we've been following for the last week or 2 weeks, and we thought would continue to go higher, and they did. They're trading really well. Oh, by the way, Microsoft is trading really well. Apple's trading really well. All right. Those stocks, and it's funny because you would think, at least I was thinking, when NASDAQ was getting hammered and NASDAQ wasn't trading well, I was worried about my Apple. And I'm looking at Apple, and Apple basically just gave back all the profit from yesterday today. It came off, new high. Stock's trading like a beast. I would like to see some more consolidation on it. Yeah, I'll talk about global. I like to see some more consolidation on it at this level. Trading between 155, 158, 57. I like to see some more consolidation, but it's trading well. It's holding up. Same thing in Microsoft, which I mentioned to you guys. It has not taken at that old high. It hit it once, then it came back and stayed there for a couple of days and tried to hit it again. But right now, Microsoft is sitting at $300. Is sitting right at near-term support. The other thing that's interesting is Microsoft came back and filled that gap. There was a gap in it, came back and filled it. Again, I'm telling you, a move through that 305 old high, I'd be a buyer of Microsoft. All right, I had some questions here. Let me see. Somebody asked me about, I'm just looking. I talked about Ethereum. Okay, I did that. Talked about, Globe. Globe. Yesterday, it sold off to the bottom of the near-term trading range. And then today, it hit an old trading range at 68. I am still long. I'm still profitable, but I'm, when the stock hit 84 and traded sideways, I said, this stock it's volatile. It just gives you big moves. It's an international stock, as you guys know, and it's a technology stock. So, but I'm still sitting here. I've got just enough. It's a small position, which if it actually started trading well, I'd probably add to it. But the volatility is there. So I'd like to see a strong move and hold some support there. The other one that comes to mind too is Monday, MADY. Monday, sorry guys, I'm typing it now, MADY. I'm still long Monday. Profitable for me still at this level, knock wood. What's interesting though is that the stock pushed up to 420 and it came back. It's actually in a nice trading range. So it's bounced off this support at 380. It's hit down here a couple of times and bounced off of it. So I'm okay with this position. As I mentioned to you though, I started out with a super small position looking to add to it. And the reason why I started out with a super small position looking to add to it if it trades well is that if the stock actually fell out of bed, my position is so small it wouldn't really faze me yet. But that's what I'm doing with it. All right, let me see what else. Zoom missed a number, but think about it. Zoom's numbers ran because of it was a pandemic stock and the growth of the pandemic. They reported earnings. From what I saw and read, that the numbers were slightly light. The number of new subscribers, users was light. They lowered guidance, so you figure the stock had to come in. The other thing too is, again, I always tell you guys this, and I know you know it. No company's in a bubble. All right. I haven't talked about this in a while, but I guess I'm going to talk about it now. No company's in a bubble. Every company has suppliers, and most companies are supplying someone else. Now, they might be supplying consumers. So if we're talking about Johnson & Johnson, they supply directly to consumers. Okay, Nike supplies to consumers. But Nike has, and Johnson & Johnson have people that supply goods and supply raw material to them to make their goods and service. So why am I saying all this? As the pandemic, well, I should say this, as the stay-at-home restrictions have lifted, students are going back to school, parents are going back to work, schools are open, people are going back in the restaurants. Even though, don't get me wrong, I understand about the COVID and what's going on. I'm just telling you that people are actually out and about more. Because they're more out and about, there's less people using Zoom. Let's talk about Cal State Fullerton, where I'm a lecturer. Cal State Fullerton, I believe my number is about 85% of the classes, 90% of the classes are basically back on campus. I know in the finance department, the majority of classes are back on campus. So if they're back on campus, the demand or the usage for Zoom has actually dropped. So that's what's going on. So that's with Zoom. All right, let me see what else. When I add to my position, how do I determine the size? I typically double up. So if I'm long 100 shares and I go to buy more, I'll buy another 100 shares. Now understand, this has been when I have a really, really small position. If I take a normal position, pretty much I'm probably just doubling up. And I'm not doing it as frequently. All right, so I'll give it more room. On a smaller position, like I said, on Monday, I went in with a super small position. I went in with a position that's 1/10 of the size I normally would end in. So to give you an idea, if I take a position with 100 shares, on this Monday I would take 10 shares. I don't even think I took 10 shares. But anyway, you get the idea. If I normally buy 1,000 shares, if I'm looking at stock and say, wow, full position is to be 1,000 shares. A lot of it's based on dollar amount, not based upon size. Then I'll double up. I add to my winners. One of the other things I'll do too is, just so you know, and I'm not sure if this makes sense. What's going on, Sarge? James. Here's one of the things too is that when I'm taking a position, a couple things. I look at my position. I'll take a position. I'll add to position. But I only add to the position when I think it's working for me. And if I don't have any extra capital in my account, I'll then start looking through my other positions on the worst performer or the one that's dragging the most. So it doesn't mean I'm not happy with the stock. Again, what it means is I ran out of cash, I ran out of inventory, but I want to own this stock. So I'm going to look through my portfolio and say, all right, what do I have I'm trading wise that's not working right now? I might come back to it, but I need the money somewhere else. So I'll close up that position, take that money, put it in that position that's really working. I'll track the position I had. If it really starts to work out, I'll add to it. If it's not, I'll close that position. One that comes to mind right now that I did that with was, you guys, it was over a year ago, I brought EPAM. At the same time, I also mentioned ServiceNow, and I brought ServiceNow. ServiceNow was trading well, then it stopped trading well, wasn't trading well. I took my money out of ServiceNow, NOW, and I put my money into I put more money into EPAM. I'm just typing in the symbols now. So there's EPAM. And here's ServiceNow. So I sold my ServiceNow and put and took that money and put it into EPAM. All right, I doubled up my position. Now, with that said, I kept watching ServiceNow. ServiceNow basically is at or close to its all-time high. Stock's trading really well. But I did not add to it because EPAM is trading as well, if not better. So therefore, I just stuck with my EPAM. Again, don't get me wrong. ServiceNow is trading extremely well right now. 2 days ago, it set an all-time high at 680. It actually started setting all-time highs back here in August 23rd. It's been setting new highs, and it's finally backed and filled off of that. So like the company, I know a couple of analysts on the Financial Channel are pounding the table on it, but that's what I do. Again, like I said, I like ServiceNow, but it started coming back in. It wasn't trading well. There's some profit taken. I took that money and said, okay, I'm gonna lock in that profit. Took it and I brought some EPAM, and it's worked. All right, but I keep tracking them. That's why I'm telling you. I'm looking at ServiceNow, going, wow. Maybe when ServiceNow started breaking out, I should look at my portfolio, some other things that weren't moving as well, and brought some of those. Sold those and brought some more EPAM. All right. Any other stocks you guys want me to look at? I basically got another 20 minutes. I have nothing else to add. Oh, I was finishing my story. I get distracted. I'm going to give you an example. I'm making up an example. I'm going to make up an example. Let's see. GameStop back in the day. GameStop going back 10 years ago. When maybe a little further than that, 15 years ago. When all you guys were basically going to GameStop to buy your video games. So this was easy for me. To trade GameStop, one of the things I looked at was, I looked at GameStop and I also looked at the gaming stocks. Understand, if the gaming stocks, Electronic Arts, Take-Two, if they had a blowout quarter, which means they were selling more games and people were buying more games, they had a blowout quarter, I would jump and make the assumption that GameStop was going to have a blowout quarter. Why? They're dealing in the same products. People were buying products from the actual game manufacturers, the DVDs, and after they got tired of them, whatever the case may be, they would go into GameStop and swapping them for new games, swapping them for other games. And so GameStop's business was directly correlated with what was going on with the actual gamers. All right. Case in point, I know my students in class did this one time. One of my students highly recommended, the stock ran for a while. He recommended a chemical company out of South America that made the lithium for lithium batteries. And this was at the time when the electric cars started taking off, and electric cars were doing well. And the main component in an electric car, of course, is the battery. The bigger and stronger the battery, the better the actual car performs. That's where the speed and power and everything comes from. So this company, I cannot remember the name, it took off and did extremely well. But the reason why it did well, supply and demand. This mining company, this lithium company was not in a bubble. All right? Tesla was not in the bubble. Tesla's saying, we need to sell more cars. We got demand. We need to make more batteries. In order to sell these cars, we need to make more batteries. In order to make more batteries, we need more lithium. So we saw the demand for lithium go up, and we saw this company do extremely well. No company's in a bubble by itself. They all have somebody supplying them, and they all take their finished goods and services and sell it to someone else. All right? There's a chain there. Start studying the chain, guys. Study the chain. What companies supply your company? What companies supply your company? And whoever supplies your company, knock wood, hopefully you can find one or two that report before your company reports earnings. Again, think about this. Milligan Donuts, my company. You guys know me, hear me talk about it. If I'm selling more donuts, it means I need what? I need more sugar. I need more flour. I need more vegetable oil. I mean, that you just know it. So if I'm selling more, then I need to buy more. If my suppliers are selling more to me, then you can make the assumption if I'm buying more from my suppliers, the only way I'm buying more from my suppliers means I'm selling more. I'm a smart businessman. I'm not going to buy from my suppliers and put it in storage. That doesn't work that way. Those are dumb business people. All right, these smart guys, what do? So nothing's in a bubble. Start looking at your companies. Start figuring out who supplies them, where it comes from, and start trying to get an early read on those things. All right. It's 1:45. I got 15 more minutes. Any questions? Thank you, Andrew. I appreciate you, man. Good seeing you. Hopefully everything's working well. The chain of command. I got 3 months free coffee at Panera, but nothing in life is free. So who is getting ripped off? Someone has a chain. Someone in that chain, right? Why somebody have to be ripped off though? Why can't it just be a successful business? I mean, think about this. Your technology stocks, your auto manufacturers, they buy chips from these. They're all buying chips now. Because everybody's going electronic, everyone's buying chips. There's a chip shortage. All right? Now, the chip manufacturers, they're not, in theory, they didn't go out and pump up price. All right? They just didn't go out and say arbitrarily going to run up price to squeeze these guys. They want to make more chips. They want to make money. The companies that buy the chips, they want to buy the chips. The problem is that there's a shortage on the chips, which means there's a shortage on the actual cars being manufactured and everything else that uses these chips, which is forcing their prices up. It's not about somebody being ripped off. It's about supply and demand. Econ 101, supply and demand. All right? All I'm saying to you is take that supply and demand and start studying who's supplying whom, who's doing what. All right? No companies in a bubble. None. All right. I know I beat that, as the saying goes. I'm redundant on that, so I'm going to leave it alone. I'm just looking through to see if there's any more questions. I don't see any questions. I don't see any stocks anyone wants me to look at, which means that, oh, Netflix. All right, let me switch. Let me switch. I'm switching to a weekly. Yep. If you switch to a weekly chart on Netflix, all right. If you switch to a weekly chart on Netflix, I'm just making it a little bigger so I can see. What you're going to notice is Netflix was in a trading range with major support at 476 and major resistance at 568. Over the last 4 trading days, Netflix bounced off of the middle of the trading range. And last week somebody asked me about this, and I said to myself, look, Netflix in the middle of a trading range. It's real easy. If you want to be aggressive, you could buy it here. If it breaks 480, close out your long position. And if it goes through the old high, which is around the 567, 568 number, it's going to go. That's the top of the trading range. I also said you can trade this stock until it doesn't work. So in other words, when it got to 566, 68, if you wanted to, you could actually have played the stock short with a buy stop somewhere around 600. Bottom line though, it took out the old high. It's trading well. Volume's light, but it's trading well. So Netflix went to a new high. It busted out of this long-term trading range. This trading range that I just gave you between 470 and 570, 575, somewhere around there. That trading range goes back as far as July 2020. So over a year ago, this thing was just basically trading and finally broke out. So that's bullish. Now it broke out off a light volume, but it did break out. And it's actually going higher. It's going higher off a light volume, but at a time when a lot of the tech stocks sold off. So it's trading well. If you own it, stay with it. If you're looking to buy it, I'd be looking to buy it on a move through the, I'd buy it here. Let's see, give me a second. The old high was 592. You're within 10% of the old high. I mean, 10%, it hasn't gone above 10% over the new high, old high, excuse me. So therefore, you can buy it right now. Anybody that likes the stock, looking to trade it, here's a buy right here. It really is. All right. I don't see any more questions, so I'm going to hop. Once again, I appreciate you guys. Oh, I do want to add one other thing. Guys, the reason why I like doing this and the reason why I think you guys should like coming is the more that we do this, the more we become like-minded. The more you become like-minded, you'll find trading ideas from people that trade like you that you might have missed. Prime example, I don't know who it was last week mentioned, the pandemic, not the pandemic, the hurricanes coming and needing to actually buy, supply chain company that can supply because people have to rebuild. And he showed me a stock. I can't remember what it was. It might have been Home Depot or somebody. And I said to him, I said, look, if you want to play that, the play that I think is the best play is Tractor Supply, TSCO. And Tractor Supply, when I pulled up the chart, trading well, went to a new high, holding up, looks like a champ. The only reason why that came up, though, is because you rattled my brain when you asked the question. So all I'm saying to you guys is if you see something that you like or you don't like or you're looking for ideas, this is a great place to come up here, share ideas, get ideas from people that are like-minded. So you know that if I put a stock up here, if you've been listening to me at all, you know two things. One, the stock's either at or near its all-time high. All right, thank you, Lance. So you know if I'm putting a stock up here and I say I like this, you know two things. One, it's at or near its all-time high. Two, you know that the stock has basically been in an upward trend for an extended period of time and trading really well. And three, you know that I don't bottom fish. I don't bottom fish. I don't say this is oversold, buy the dips. I don't do any of that. So if you're thinking or you like that trading style, that trading idea, that philosophy, then we're like-minded and you should share your ideas and I'll share my ideas. And between that, we might find stocks that we might miss. It's hard to do this by yourself. All right. And it's gotten harder over time because there's so much data now, so much information coming out. One of the things I've done over the years is I've tried to keep my buy or sell signals down to 2 or 3 indicators for me. Too many. And if you're looking for too many lights to turn green, you know that all of them are never going to turn green. So I've narrowed it down for me for 2 or 3 things. Now, don't get me wrong. Subconsciously, there's a whole bunch of other things I look at in the stock. But my final decision comes down to basically 2 or 3 things. And I'll tell you what they are. Volume and price. I'm a stickler on volume and price. I mean, that's just me. All right. So that's me. That's the end of it. I'm going to shine off now. So I appreciate you guys. That was my pitch to get you guys to share ideas with each other. If you guys know each other. And by the way, there's a number of you guys on here that have been on here today that are Cal State Fullerton alum that I've had in class. There's a bond between you guys. Some of you guys might not even know it. I mean, I'm looking at, there's Lance, the former student. Alex was on here, former student. I got a new student that's on here. James, a former student. I'm not sure who that is. I'm just not sure who the person is. There's Alex again, I said. There's Hank Henry, another former student. So I've got a bunch of former students on here, which means that you guys all kind of, I don't want to say were trained by me because that's not the word. I would say educated a little bit. I showed you some things, but you guys tend to think alike. So, all right. Have a blessed day. I will see you guys next week. Go make some money. Tell me about your successes. I'm rooting for you. Let's put some money in our pocket. By the way, don't forget, I've always told you this, and it's still true. Triple-digit returns are available. Triple-digit returns are available. By the way, I'm up triple digits in my EPAM. Triple-digit returns are available for you. All right, guys, have a great, great day.